Welcome back to the Rebel's Edge, where a lot of people were talking about how big a move Nvidia was going to make after its earnings. Was it going to be up or was it going to be down? Of course, we have the answers, and we're going to clarify something about volatility and what it really means, folks. Bang! Welcome to the Rebel's Edge. Bang.
You got the
Welcome
clapper?
back, everybody.
Where the hell's
That
the
is
clapper?
Pete Nigerian over there. I forgot the clapper up in San Juan, Pete. I came down. I've got a house in the south, as you know, Pete. Mm-hmm. And it was going to be sunny down here, and it might be kind of broken sun and windy up there. So I said, let's go down. So we went down to the south, and I love it down here. It's freaking amazing.
Decisions.
Yep. That's not why you guys tuned into the show. You tuned into the show because we're going to tell you why so many people on TV are wrong about volatility and what it really means. But first, I'm going to have Pete talk about the VIX, and then I'm going to break that down. So, Pete, let them have the VIX.
Well, as you know, John, and I've been doing it for a long, long time. I mean, when CNBC first brought me in 2007, it was late January, and we started talking about the volatility index, and people just got glossy-eyed. And I'm like, look, it's not that confusing. But as far as the volatility index as of today, or the last week or two or three, let's just take a look at that, John. If you go back to April 25th, we were looking at a volatility index measurement of about 17. That path from the upper left to the lower right had begun, and yesterday we got all the way down to 1152. Now we continue to kind of hold somewhere between, call it 1150 and call it maybe 1220, something like that. But it gives you a little bit of an idea of where we are and why we're here. And because of what's going on in the market and all the various catalysts, especially after getting through Nvidia, which a lot of people were waiting for, and that was going to be a biggie. We'll get into that as well. But let's just remember this. A 16 VIX means you're going to be moving in the S&P about 1% every day. So are we there? No, we're not. Now we're down in the 12s. We're seeing it a lot more of a crunch down. We're also seeing volumes in terms of the spider as well as the options kind of coming down as well. So very interesting times right now, but that volatility index sitting right about near those November 2019 levels, John. We're going back to November of 2019 to find volatility at this low level where we are right now.
Yeah. And folks, when we talk about volatility, that's a measure of risk, really. How much, obviously, if it's a 32 VIX, we'd be looking for perhaps 2% moves. As Pete said, a 16 measurement is a 1%. So 0.5% would be 8. We're not at 8, but we're a lot closer to 8 than we are to 16 right now. And, or at least, right in the middle between there. I'm going to let them know something real quick, Pete, about straddles. So before we get into macro and the futures, yesterday, Nvidia was trading with a straddle. That's the combination of the call and the put together. That was about $78. You divide that by the strike price, in this case, 950-ish, and you get a move of about 8%. Now, that doesn't mean that the street thinks we're going to move up 8% or down 8%. What it means is 66% of the time, that's one standard deviation, folks. Won't get into that, but 66% of the time, we are going to be within that band, within 8%. So do you want to bet that we'll be above that? That will be, for instance, trading up $100 or more? Well, if you want that bet, you're taking the 33% chance that we could be up there in the 2 standard deviation move area. So that's what it means. Again, it doesn't mean that we're looking at an 8% move. It means 66% of the time we should be somewhere between $0 and $78 in the case of this, up or down for Nvidia as it was last night. And it was very accurate because Nvidia came out last night, came out at 950, went to 960, hovered around there. Today it got up 6%. We'll talk about that in a minute. But we just wanted you guys to know what volatility really means without trying to make your eyes gloss over with, oh, well, delta, gamma, theta, and all that stuff. Anyway, Pete, macro. Let's talk macro. A lot of hedge funds, according to Mark Lopresti, who got this from a pal of his at Goldman Sachs, a lot of hedge funds are lightening up on the Magnificent Seven. Now, one that they're not lightening up on, probably because it's on its backside, is Tesla. But that's my macro today, Pete, that the hedge funds are kind of taking let's give it a rest after a furious rally of better than 5% for the S&P in May. What do you say, Pete?
Yeah, no, I fully back you up on that, John. I mean, I think it's really interesting to see what's going on from a macro perspective. The macro of the week was always waiting on Nvidia, though. We talked about that just yesterday. That was the macro minute. Nvidia, what's going to happen? Because we all know AI, and AI is Nvidia, and Nvidia is AI. It is the big granddaddy of them all. It absolutely lived up to everything it was supposed to. We'll hit the actual details in just a second.
Now, 50 Cent is a buyer of upside calls in the VIX. We don't know if it's a man or woman, and it's certainly not Curtis Jackson, the 50 Cent, but it is somebody who buys a lot of upside activity, betting that either A, we're about to see a downturn because that would cause VIX levels to spike, or they're protecting against a downturn, one or the other, Pete. So you and I have seen 50 Cent active, and for the last few months hasn't been very active, but he or she has been there a couple times in the last few weeks.
Yep. We're starting to see a little bit of activity. It's very interesting. My fantastic futures is going to be sugar. It's at the lowest levels, John, since October of 2022. So it's interesting to see how that direction and where it's moving. China's the biggest buyer as of right now, but there's a global surplus. So we've talked about inflation. We've talked about a lot of different things, but now we're starting to see a little bit more spreading out a little bit higher. And we're seeing that whether it's sugar or whatever category you want to take a look at, we've seen some of these things starting to come back down just a little bit. You talked about cocoa the other day. Cocoa's another one of those that's starting to come down off of those incredible highs that it had gotten to. So we'll be keeping a very close eye on that to see if this pattern continues.
That's right. And if you want to know more about any of that stuff, folks, check out our book, It's Not an Option.com. If you go to itsnotanoption.com, you can claim your free book. It is completely free. We will ship it to you for free, but you got to go to itsnotanoption.com and claim your book. The only reason you have to pay for it is if you want it faster. You're going to go on a trip and you want it in 2 days instead of 5 days. Okay, you're going to have to pay for that expedited delivery. Other than that, free book. Understand about options, about volatility. It's a great way to start your investing career, folks, or to enhance your investing career. All right, Nvidia, Pete. This was the granddaddy, just like you said. They came out with a fabulous earnings report, and the market was, because even though it was up 260%, Pete, for revenue, it was like, okay, that's what everybody expected. If you post what they expect, you're not going to get that much of a pop, even if it's fantastic news. But what was not known, and certainly what did play out, Pete, was a 10-for-1 stock split. When you announce a 10-for-1 stock split, yeah, there's a bunch of people that are going to buy the stock thinking that there's something magical about a 10-for-1 stock split. All it does is make it easier for people to get in without perhaps as much friction. But other than that, it changed nothing about the underlying fundamentals of the company, right, Pete?
You're exactly right, John. But it does give opportunity out there, as you were mentioning, too. So, I mean, Jensen Huang, let me tell you something, John. Going into this thing, you already called it 262% year over year. That was the growth rate of revenue. That's pretty incredible. 461% on the earnings side. Not so bad, right? So these numbers are all numbers that were somewhat expected, to your point, though, because we knew AI is what it is, and we know Nvidia is the king of it all, right? But I teased about this yesterday, and now I kind of got the answers, which is this 10-for-1, John. It's a lot like Stephen Jobs, which is exactly what Jensen Huang is trying to present himself. He's wearing the all black. He's always got that black, is it a leather coat? I don't know what the hell that thing is, but he's always strolling
Looks like a
around,
members
right?
only coat.
Yeah, it's like a members only, but instead of pulling out, oh, just wait 1 second, what about this, and pulling out the phone or something like that, he's reaching in there, pulling out a chip, and then all of a sudden he breaks down. He goes, hey, how about a 10 for 1? And to your point, that is what moved the stock. We were up 20 or 30 points to the upside. That was just fine. But that 10 for 1, that's what put it over 1,000. Let's be real. And that's what's got everybody so excited today.
Yep, deservedly so. And,
Yep.
I don't mean slow clap. I'm not doing this. That was a great report. He did a great job. You did a great job breaking it down, Pete. All right, let's talk about ELF, ELF, because this one, big move. It's a big cosmetic maker, and they reported a 71% year-over-year jump in revenue sales. Just as Pete said, it's not exactly Nvidia. It's not 262%, but they didn't come up with some AI for makeup. So for these guys to be up 7, that means they've got some very popular products, and good for them. That's why that stock's moving today.
Absolutely ripping to the upside, John. It's unbelievable how it's moving right now. It's trading 187 last I looked, but up about 20%, something close to that. When you look at the gross margins, the sales numbers are always great. Earnings numbers are always great. I like to look at these margins just to see how are they doing. 71%, not so bad. That's a pretty damn good margin for anybody. So the combination, John, retail, they've got e-commerce, they've got it going. They're doing things the right way, and that outlook wasn't so bad. That's the other thing, John. How about that outlook? It's only up, 20, maybe 22% for 2025. I'd say that's pretty damn good. That's why that stock is screaming to the upside today.
Yep, that's ELF, everybody.
Yep.
All right, next one, Pete. Let's talk about Arista Networks. The symbol here is ANET, like ANET, Arista Networks. Well, these guys, Pete, have a lot of keywords, I'll say, because I could have put them right after Nvidia, Pete, because clearly this is a driver for this stock, Nvidia. Because what did they say? They said cloud, and they said AI, artificial intelligence. And the fact that they say those are driving the cloud networking in particular, and obviously artificial intelligence pushing it along as well, that's why this stock is getting a lot of love. They're also on target for a big revenue number that a lot of us, I'll admit, I didn't know that they'd emphasize that they're still going to be there, Pete, but they're saying they're going to be at 750 million in rev for 2025. Granted, that's a long way into the future, but still, that's a big number.
Yeah, and looking at the stock, it's kind of been moving all over the place, John. It got all the way down to 290. It got up to 305 or something like that. It's trading somewhere north of 300. But, they've got this competitive edge. You were talking about the client to cloud, all of that. But I think you're exactly right. They want to maintain their double-digit growth. Well, of course, if they could do that, that's never a bad thing. People are pretty excited about that. So that's why this stock is a heck of a lot closer to 52-week highs. It's not at 52-week highs, but it's a lot closer to those than it is the 52-week lows. So it's looking pretty decent for Arista at this point in time for sure.
Well, and just to close it up, folks, I can tell you this, and I don't care what stock it is, including Nvidia, including Arista Networks, including Microsoft. I mean, if you're going to issue a whole bunch of shares, your shares are going to go lower. And in this case, it's Cytokinetics, CYTK.
Yep.
And they announced, Pete, that, and these guys don't have billions, plural, of shares like a Microsoft, like an Nvidia has. These guys, a much smaller amount of shares, they're going to be bringing 10 million shares, almost 9.8 million, I'm rounding up, but 10 million shares to market, Pete, to maybe raise about $500 million. Not saying that's a bad idea, but I'm saying the day you announce that, your stock's going to get hit. This one was down just shy of 20% earlier today.
Yep, recovered a little bit. Last I looked, it was down about 16%, but we're just kind of throwing around a few numbers. But the cash burn here is still very high. There's a lot of reasons why. Maybe they've got some interesting things going on in the cardiovascular world for sure. They've got 3 that have actually gone through the phase 3. They've also got 3 more behind that in the very early stages, which means it's years away. We're talking phase 1. We're also talking preclinical. So Do they have something? They got a little something, but they got a heck of a cash burn. They don't have a whole lot of cash. This is a company that's going to have to really make some move. That's why they're doing what they're doing right now, trying to raise a little bit of that capital up. And it should be pretty interesting. I'll tell you, I kind of want to like the company because of where they are in this whole world of biotech. But I'll tell you what, from a financial perspective, I'm very, very nervous about this name. This, for me right now, is a no touch. I'm going to back away. I'm going to sit back. I'm going to see how this plays out because there's no reason to jump in front of this thing right now. And the reason it's down so much, well, like you said, 9.8 million, let's just go to 10 million. That's a fair amount of shares that they're dropping on us, John.
Yep. And hopefully that 500 mil helps get them to the next hump and gets them to more profitability. But this is an issue whenever anybody needs to raise cash this way, folks. Again, I'm not saying it's a bad idea. I'm just saying the day you announce that, that might be a day that you might want to be on vacation if you're running that company, because you don't want to be looking at your stock price that day.
Right.
All right, Pete, we want to talk a little bit about sports before we lead into your sports huddle this weekend on Sundays. Pete does the sports huddle, folks, from 10 a.m. Central Time until noon Central Time on WCCO up in Minneapolis. So I know you're going to be doing that from California this week, Pete. So tell us a little bit about the sports that you're watching right now.
Right. Well, the California sports, they're way out of the picture on this one, John. I mean, you want to talk about something. Here's the problem that the NBA has right now. They got nothing going west, right? I mean, when you take a look at who the teams are that are left, now this doesn't play out really well. That's why some of the ratings aren't what people would expect. It's a great year. I mean, game one, you've got an unbelievable matchup with Boston and Indiana, right? I mean, it went down. They went to the first game. It went to overtime, and it was in a very, very exciting game. Problem is, Indiana and Boston, Midwest, and you got the East Coast, right? Now, all of a sudden, fast forward to last night. My Minnesota Timberwolves kind of laid an egg. I mean, it was a close game, but, John, we could not shoot. The Timberwolves just had no ability to be able to drop the ball into the hoop. It really was a struggle for them. The game was very close nonetheless, but we lost the game. And let's think about this. Minnesota, Dallas. Now, think about the entire West Coast at this point in time. To the folks out there in Washington and Oregon and California, Utah, and Nevada, and everywhere else, do they really care as much as they normally would? You don't have Phoenix, you don't have LA, you don't have Sacramento, you don't have a lot of things. That's a little bit of a problem. That's why I think we're seeing right now that the numbers don't look that great. But that being said, I think as we get a little bit closer to the championship games, whoever it is, if it's Minnesota and Boston, I think it actually will start to elevate back up again because people are hearing more about the Minnesota Timberwolves. They already know about the Dallas Mavericks. They've got some great players. By the way, John, Kyrie and Luka last night combined, 63 points. Meanwhile, Cat and Ant, 35 points. That's a problem. That can't happen. And I think they can fix that. But I think also when people start getting into this a little bit more as we get through these championship games and get to the ultimate championship games, I think we'll start to see some of the folks actually come back to it and watch the NBA absolute final championships. John, what do you think? Can they get the ratings back up just a little bit because of that?
Well, your buddy Charles Barkley and your buddy Shaq, two of Pete's friends, in particular Shaq, they have made it so interesting, and they've been talking up Luka, they've been talking up Kyrie, and of course, talking up Ant. And Anthony has been fantastic. But like you said, Pete, last night, off night shooting. Karl Anthony Towns also off night shooting. If you've got the big man and Anthony Edwards both not really performing at the highest level, that happens. We all know it. But it's potentially anyway, 7-game series. It's the best of 7, whoever gets to 4. So that's what we got to hope in your case, Pete, with the Timberwolves, that they can make a statement game still and come back and get into it. You don't want to be down 2-0 to these guys because Luka and Kyrie are going to shoot the lights out. They do it almost every night, Pete. But then again, usually so does Big Cat. Karl Anthony Towns, and so does Anthony Edwards.
Yep.
So 105, 108 doesn't sound like they got blown out to me, Pete. Sounds
Yep.
like if they hit a couple other shots during the game, maybe they win it. So
Yeah.
I'm not, I wouldn't be tearing up my lottery tickets just yet.
Nope, I'm with you. I'm with you. And it's pretty exciting. And we're still waiting on Kevin Garnett. Everybody's still waiting on Kevin Garnett, man. Because, John, he hasn't been here since they were there 20 years ago. He's got an issue with the franchise. So that, we'll give him that. All right, next up, Major League Baseball. And I'm going to something we've talked about before, but I just wanted to point it out because I find it so interesting as we get a little bit deeper into the baseball season, John. How about this? Take a look at the payrolls, right? You've got the New York Yankees. Now, they're the top of the American League East. They got a great winning percentage. Matter of fact, they're the second best winning percentage right now in Major League Baseball. They're second only to Philadelphia, who also has a payroll of $245 million. The Yankees are $305 million. But here's what's kind of interesting for me. Cleveland, $101 million. Now, I just got done saying the Yankees have $305 million. Cleveland is the second best, or third best rather, with 660 as their winning percentage right now. American League Central. Also, the Kansas City Royals. They're in the same Central, John. 116 million. So it just goes to show you that yes, money can buy a lot. The Yankees look great. The Dodgers look great. Philly looks great. But not too far back at about a third of the price of the others. You've got Cleveland, you've got Kansas City. And if Minnesota starts to kind of perk up a little bit and get back in there as well, John, I don't know. I look at this and just wonder all the time, how is it that happens in baseball? Is it bad contracts, or are these guys just saying, you know what, it's worthwhile to get these fannies into those seats at home for that extra money? Because we know there's a lot of money in TV. But holy smokes, these guys have payrolls that are outrageous, aren't they?
Yeah. And folks, this is actually really simple. Pete knows it. I know it. We've mentioned it all during last season of Major League Baseball. But I've got a friend. He owns a significant piece of the Cincinnati Reds. Great guy. Jack. I won't say your last name, Jack, but Jack owns a significant piece. And he's one of the premier owners of that team. They have several, because in baseball in particular, Pete, it seems like it's not just a Jerry Jones. Every once in a while you get just a Steinbrenner or just a Stevie Cohen with the Mets or whatever. But in this case, or in the Dodgers, Pete, you've got Magic Johnson and his group that own that one. So anyway, where I'm going with this is, baseball is a sport where they do not share revenue. The TV, different story, but your live gate is your live gate. So when you look at Stevie Cohen with the Mets, or any of these teams that are paying those 270, 290, $300 million payroll, why are they doing it? Just like Pete said, put butts in the seats for home games. For the Dodgers with Ohtani and so forth, Ohtani. When you've got that and you're putting 52,000 people in there, you're keeping all of that. None of that goes to Cincy. None of that goes to Tampa Bay Rays. None of that goes to Florida Marlins. None of that goes to any of those small or Minnesota Twins. None of it goes to those guys. So it is tough for those teams. And this next round, Pete, of bargaining that they're going to do, they're going to have to address that, because otherwise they really won't be able to be competitive. You will see teams that can win, but do not have the big names because they can't afford them. Without that sharing of rev, you can't afford them. NFL, you don't get to keep your whole gate. They have the TV contract with the networks instead of your own network, Pete. Like the Yes Network, for instance, where, how does Minnesota Twins compete when the Yankees and the Mets and so forth are on the Yes Network? The answer is they can't. They don't have the money to put those same big name players on the bench and in the field. But they can win nonetheless, but they can't compete on the salary side without that rev share, Pete.
Yeah, yeah. It's something, it's interesting. I think one of the leagues that have done a really, really good job is Major League Baseball. So I think right now my confidence level would be high that they can figure some of the things out, because if it were the NBA, they would never be able to do it. The NFL, maybe, but I'm not so sure. I mean, there's still a lot of problems out there, but I'll tell you what, Major League Baseball, they're aggressive and they make those moves when they think it's needed. And so it's something that maybe they will get this thing figured out in the not too distant future. Well, that's a
Yeah.
lot of fun, John. It's a lot of sports, man. It's a lot of cool things going on in the world right now. Here in Minnesota, they do not stop talking about JJ McCarthy. I'm telling you, they are absolutely on cloud nine right now. It's almost like he's Caleb Williams' first pick in the draft. I mean, they will not stop talking about this kid, and he looks pretty good so far.
Yeah, he does. Yeah, he does. Well, if you want to hear more of that, folks, more sports talk, not just Minnesota, but a lot of Minnesota sports talk, tune in. We have a link that we put up on Market Rebellion for Pete's show that he does on Sunday, WCCO Radio. It's a big 50,000 watt flamethrower up there in Minnesota, AM 830. You can also listen on the Odyssey app, and we'll put a link up there. Again, it's 11 a.m. Eastern time to 1 p.m. Eastern time Sunday. Make sure you check it out. And we will not be back Monday, folks, because I think most of you are aware that Monday is a holiday. It happens to be Memorial Day, right, Pete?
Mm-hmm. Yep. Should be fun.
So
yep.
We will see you again Tuesday next week. Bang.